Inside Compute USA's first month. A $1 billion compute pipeline in the first month of a new company often belongs to setup. Compute USA used its first 30 days to put 9 figures on the board. Launched in May 2026, the company built a computer infrastructure pipeline exceeding $1 billion and signed a 25-megawatt letter of intent with a strategic partner. The figures mark more than an aggressive opening. They show institutional customers moving quickly to secure the infrastructure behind modern artificial intelligence. Founder Mason Joppa said the early response grew from a persistent gap between rising demand and a market that remained difficult to navigate. Compute USA was born from a pattern I kept seeing repeat itself: enormous demand for compute, fragmented and opaque supply, and a complete absence of a trusted, institutional-grade operator who could bridge the two at scale, he explained during a recent interview about his company. Compute USA operates as a next-generation neocloud, a newer class of cloud provider built around the high-performance GPU capacity required for AI. The company delivers GPU compute and infrastructure services to enterprises, AI labs and hyperscale customers in the United States and abroad. It builds and operates its systems entirely in the US, placing sovereign access at the center of its model. The company's thesis reaches beyond chips and servers. Compute USA treats access to compute as an infrastructure and financial planning challenge. The AI compute market was being approached as a hardware sales problem, when it's actually a financial infrastructure problem, Joppa said. Institutional customers need to know whether capacity will remain available, how quickly equipment can deploy, what contract structure fits the workload, and how the investment will affect long-term planning. Compute USA combines hardware procurement, cloud access, dedicated environments, infrastructure trading and structured off-take agreements to address those questions through one platform. Joppa credits the company's early pace to an operating mindset built around decisive execution. Speed and focus are the only sustainable advantages in fast-moving industries, he said. Capital follows execution. Connections follow credibility. Compute USA converts demand into measurable traction. Compute USA's first-month results capture 3 distinct stages of commercial momentum. The server revenue bookings reflect customers making immediate commitments. The contracted pipeline points to a larger group of planned infrastructure deployments. The 25-megawatt letter of intent connects that demand to the power and data center capacity required to support it. Together, the figures show a company moving from market thesis to execution within weeks. Joppa evaluates emerging markets by looking for problems where demand has become undeniable but supply remains constrained. AI compute solves a real problem. The world needs orders of magnitude more processing power than current infrastructure can deliver, he said. I look for technologies where the demand is undeniable and the supply is constrained. Compute USA operates across 2 primary platforms. Its GPU cloud provides on-demand and reserved high-performance computing for AI training, fine-tuning, inference and high-performance computing workloads. Its hyperscale cloud supplies elastic compute, storage and networking, along with managed Kubernetes and machine learning operations tools. The company also runs an enterprise server sales operation, a dedicated compute trading desk and a platform for structuring long-term off-take agreements. Customers can buy servers, place them in dedicated bare metal environments, reserve cloud capacity or combine those options. That range matters because GPU infrastructure demand varies widely by customer. An AI lab training a new model may need a concentrated block of capacity for a defined period. An established enterprise may want predictable pricing and a dedicated environment. Another customer may need to secure supply before its full deployment begins. Compute USA's model gives each customer several ways to control capacity, cost and contract duration without forcing every workload into the same procurement structure. Mason Joppa. Enterprises need structured access. The AI infrastructure market often centers its conversation on hardware. Which GPUs a provider can source, how many it can obtain and how quickly it can install them. Hardware availability matters, but it does not resolve every risk. A company may secure GPUs and still lack the power, cooling, networking or data center space to operate them. It may gain short-term cloud access without knowing whether the capacity will remain available as its workload grows. It may also commit significant capital to equipment that becomes difficult to redeploy or monetize when its needs change. Japa said institutional buyers now expect providers to address the full commercial structure surrounding the hardware. Enterprises don't just need GPUs, he said. They need structured access, guaranteed supply, flexible contract terms, and ultimately a way to turn compute capacity into a financial asset on their balance sheet. Compute USA built its contract model around those demands. Customers can procure servers at institutional pricing, deploy them in dedicated environments, and use longer-term agreements to secure capacity and create greater cost stability. The Compute Trading Desk gives customers another option. It creates a channel for managing excess capacity and secondary market compute assets rather than treating every infrastructure commitment as fixed and illiquid. Compute USA supports that model through authorized reseller relationships with Dell, Supermicro, Lenovo, NVIDIA, HPE, and TD SYNNEX. It also maintains working relationships with hyperscalers, neoclouds, and Tier 3 data center operators. Those connections allow the company to work across the infrastructure lifecycle, from server procurement and deployment planning to cloud delivery and capacity management. The model positions compute as both an operating resource and a strategic asset. Compute USA's first-month bookings suggest that institutional buyers were already looking for a provider capable of handling both sides of that equation. Compute USA's 25-megawatt letter of intent adds physical scale. Within its first month, Compute USA signed a 25-megawatt letter of intent with a strategic partner, giving its early commercial momentum a physical measure of scale. AI systems depend on advanced processors, but power often determines whether a large deployment can move forward. Dense GPU clusters consume substantial electricity and produce intense heat, requiring careful coordination across power delivery, cooling, networking, and data center operations. A letter of intent does not represent a completed build-out. It does, however, show that Compute USA and its strategic partner have moved beyond general discussions and begun planning around institutional scale capacity. That matters in a market where hardware availability can outpace the physical infrastructure needed to run it. A provider may secure servers and still face delays because a facility lacks adequate power or thermal capacity. The agreement also advances Compute USA's focus on sovereign infrastructure. Enterprises and public institutions increasingly consider where their systems operate, who controls the underlying infrastructure, and how much visibility they have into the supply chain. Governments and enterprises are waking up to the fact that dependence on a handful of hyperscalers for AI infrastructure is a strategic vulnerability, Japa said. Compute USA aims to provide an alternative through systems built and operated in the United States. Its model targets customers that want greater control over infrastructure location, supply, and contract terms without relying exclusively on traditional hyperscalers. The 25-megawatt letter of intent will test the company's ability to connect that demand with physical capacity at scale. Mason Japa. I want to build the sovereign compute backbone of the United States. Bookings establish demand. Deployment will measure execution. Compute USA must now convert its contracted pipeline into operating infrastructure while coordinating hardware allocations, power, data center capacity, networking, and customer-specific requirements. Its integrated model gives the company several routes to meet that demand. Customers can purchase servers, reserve GPU cloud capacity, establish dedicated deployments, or structure longer-term off-take agreements. Compute USA can remain involved across each stage rather than sending customers to separate providers for procurement, hosting, and asset management. That capability may carry more value as enterprises move AI projects from testing into production. Pilot programs can often tolerate temporary capacity or fluctuating availability. Production systems cannot. Once companies build products and operations around AI, they need confidence that the underlying infrastructure will remain stable as workloads increase. The pipeline above $1 billion gives Compute USA a substantial opportunity to demonstrate that it can deliver at scale. It also raises the stakes for operational discipline. Japa said fast growth should invite more scrutiny, not less. I now treat rapid growth as a time to slow down intellectually, to ask harder questions, stress test assumptions, and make sure the foundation is solid before building higher, he said. Compute USA's first month validated a market need, but the next phase will determine how far that model can scale. Japa says the company's ambition extends well beyond its opening month figures. The vision for Compute USA is simple to state and enormously ambitious to execute, Japa said. I want to build the sovereign compute backbone of the United States, the infrastructure layer that powers American AI, American enterprise, and American innovation for the next generation.